The nation's central bank released its preliminary estimates for second quarter expansion. It slowed down from Q1 mainly due to weaker investment and export growth. Plus, there's the uncertainty factor stemming from the trade battles. Kim Yasung breaks down the digits for us.
South Korea's GDP grew in the second quarter by 0.7% from the previous quarter. The Bank of Korea says the country's GDP expanded by 398 trillion Korean won, or about $356 billion between April and June. It marks a slowdown from the first quarter's 1% rise, mainly due to weaker investment and export growth. Investment in business facilities contracted by 6.6% after growing over 3% the quarter before, mainly due to a cut in investment in both machinery and transportation equipment. Construction investment also turned to a negative 1.3% after gaining 1.8% in the first quarter.
Construction investment went down as the government's housing market regulations went into effect. Facilities investment dropped mainly due to a base effect. Investment in displays and equipments are now going down, and this is likely to continue as global uncertainties like trade affect investment sentiment.
Growth in exports, a major driver of Korea's economy, also slowed to 0.8%, down from 4% in the first quarter. Imports fell 2.6% due to cuts in imports of machinery and transportation equipment. On the expenditure side, private consumption increased by 0.3% on quarter, logging the slowest growth in 6 quarters. Government consumption also grew by 0.3% on quarter. The second quarter growth figures mark a slight slowdown from the first quarter, but on year, the local economy grew by 2.9%. The Bank of Korea says second quarter growth is in line with its projections, and that if the third quarter and fourth quarters have between 0.82 and 0.94% growth rates, Korea's GDP for 2018 will hit the bank's forecast of 2.9%. But it said it will have to keep a close watch on the ongoing global trade uncertainties. Kim Hae-sung, Arirang News.